All right. Welcome to Foundations Day 5. If you made it this far, congratulations. There's a lot more to go. I don't really know where I'm going with this, honestly, but I'm assuming there's going to be a few days here just to get you guys used to trading and get you in the markets eventually. But Day 5, we're talking about breaks of structure. And in order to introduce that, we're going to talk about how to identify a high and a low. Not going to be the longest video ever, but I'm going to just show you guys some things on the charts and kind of just try to draw it out for you. It should be a pretty easy and simple concept to understand. I'll give you guys some homework for today to follow through on as well. So let's go straight into the charts and show you guys what we're looking at. Okay, here we are. All right, let's start with highs and lows. So the best way to identify high and low, if anyone was watching the previous video, I hope you were, since you're following the day by day. We talked about different candles, how to read candlesticks, and that kind of led into price action a little bit. But forget about the price action, just specifically looking at candlesticks. The way to identify a high and a low is going to be one red stick and one blue stick, or one green stick next to each other. According to my chart, it's going to be blue and red, or sorry, blue and black. So one blue stick, one black stick, one bearish, one bullish candlestick together, and that will be the high or the low. So if we kind of give you a little quick example here, you see this one right here, that is a bullish candlestick. How zoomed in am I getting? Yeah, here we are. This bullish candlestick is going to be the first stick. The next one, bearish candlestick. The tip of that wick will be the high. So you're always looking at the wick, right? That's as high as price went. Like we were talking about before, if you show a candle and you draw it out, if you guys did your homework, you're looking at highs and lows of candles and identifying certain candles. This one candle here, the highest price printed was at the wick of this candle. So this will be the high right here, right? Same thing down here if you're looking for a low. Here we have black stick, blue stick, bearish, bullish. Now the lowest that wick goes. So here's a common misconception here, right? If the next stick on a high is bearish, you would think, no, hold on, that's red, right? This means price is going down. So wouldn't it be this high over here, right? It's not exactly how that works, right? It's the highest that price printed. So within this respected candle, again, like I was saying, it's all fractal. So this 1 minute candle printed 4 15-second candles, you could say. So if you go into the 15-second, hopefully we can actually see this because it's going to kind of chop this up a little bit. Where was this high? I think it was this one, right? Was it? Regardless, right? You can kind of see what I'm talking about here. Even though that was a black candle that printed that, if you go into the 15-second chart, you'll see it's actually a green candle that printed this high. Now, same thing over here, right? Black candle, blue candle, the wick out, right? That is now the high. This goes for any high, right? But you need two opposing candles to represent a high. If you could try to imagine this, right? Oops. If price is just blasting through, right? Just flying upwards, these are not highs. On a 1 minute time frame, these are not highs. It's just price is flying, right? You can't have a high if price is just going straight up, right? If there is no pullback, oh, that's a brush tool, sorry. If price is just going straight up and there is no pullback, where is the high in this, right? There is no high here. This is just price driving upwards. The second you now get a pullback is when you have a high right there. Go up again, another high. Go up again, another high. And the same thing works for the lows here too, right? So the only way to have a low is if you have a sort of knee-jerk reaction or opposite reaction when dropping down. So again, over here, even if you're in a a bullish price action, we're going up, you're still going to have lows, right? There's going to be retracements, there's going to be pullbacks in the market. So if you use even here as an example, right? This is bearish market, but you kind of get the same idea here. Price is going downwards, it's moving downwards on a 1 minute time frame. You have this little pullback up here. This would be a low, right? Black candle, blue candle together, lowest point of those two candles, that is the low there. Same thing here, you can see the same thing. Talking about bullish price action now, like we were talking about before. Price is going up, right? That pattern right here, you're seeing the same thing over here, up, down, but you're printing upwards. The overall pattern and market structure here is bullish in this time frame. You're going to have pullbacks, and those pullbacks create new lows, right? So like we were talking about before, bullish price action is going to be higher highs and higher lows. So as you can see here, right, you have price prints up here, you get a low here. That's a low. Price prints up again, get a higher low. Again, another higher low. This is bullish price action, like we were talking about. Right here, black candle, blue candle, lowest point. That's another low. Price is printing upwards. So these are kind of just simple highs and lows, how to identify highs and lows. Now, to get into the break of structure, in the simplest terms, is when you are following a constant price action, either bearish or bullish, and in order to get a break of structure, let's just say you're making higher highs and higher lows, like we're drawing out over here. If price now retraces and breaks this recent low, so you're getting higher highs, higher lows, higher highs, higher lows, and now a lower low prints, right? Now this would be the break of structure here. That is the break of structure. We are now breaking structure to the downside. Now, every time this happens, is that a clear confirmation that the market is flipping? No, right? There could be lots of breaks of structure within the market, but we could still end up being bullish or bearish. It kind of depends on the time frame. It depends on how clear this confirmation is. It depends on if we swept liquidity or not, which again, we're going to get into this in later videos. But for the simplest terms, that is when we go from, I want to maybe type this out for you guys. So here, bullish price action is going to be higher highs, higher lows, and vice versa. For bearish price action, you're going to have lower highs, lower lows, right? Like we talked about in the last video. This is all the same thing, right? I could even paint this out for you here just so you have a clear idea of what we're talking about. Oh, that is really bad. I'm going to draw that again. Yikes. We're going to have, again, clear price action, higher highs, higher lows, higher highs, higher lows. And then here, bearish, lower lows, lower highs, lower lows, lower highs, right? Overall down movement, overall up movement. The market's pushing up, the market's pushing down. You kind of get the idea here. So then, again, a break of structure would be when you violate this pattern, right? So you have a consistent pattern, higher highs, higher lows. So for bullish price action to break, you're going to have to break a low, right? So if we're painting this out and we get this sort of price action here, but we fail to break this high, that's not exactly a break of bullish price action yet, right? Because then we could kind of pull back here and then break that high again. Because like I said before, price is fractal on higher time frames. Even though it looks like this on the 5 minute, the 1 minute, sorry, even if it looks like this on the 1 minute, the 5 minute will just look like this, right? So we are still in a bullish price action. And also, I want to stress this. Like I said in the previous video, again, price is fractal and higher time frames hold higher power. So if you are bullish in a 5 minute time frame, wow, all this is like mixing. If you are bullish in a 5 minute time frame, but you break structure on the 1 minute time frame, that does not mean we are now in a bearish price action, right? This happens a lot of times when I can even try to find one of these things for you. Here's kind of a break of structure. Let me see. 5 minute, 5 minute, 5 minute. There's probably something happening here, right? So here you're kind of making higher highs, higher lows. This is that's a bad example. Doing this live is always harder. It's always hard. Okay, here could be a pretty good example. So here, I'm going to mark this out. Where is my box tool? Here we have 5 minute price action that is overall bullish until we kind of broke structure right here with this wick and especially with this down candle. So I guess we could close it off into here, right? So we're going to make that green for now or blue. We're going to come back to that on the 1 minute. If we could find this, here we go, right? Again, overall bullish, right? We were bullish on that 5 minute. But what do we have here? Zoom into it. 1 minute time frame right now. As you're watching this print out, higher highs, higher lows. We don't break this low here. We're still bullish. Come up here. Sorry, come up here. This is a low here. We have a low right over here. Whoop-ham. And yet we come down and we print underneath this low and we break that structure. We have broken that structure. Now you're saying this is a flip of price action. Now we're bearish. On the 1 minute, correct, right? We're now going downwards, but that's not enough confirmation to be taking shorts here because on the 5 minute, like I said before, like we saw before, ooh, I went to the 56 minute. On the 5 minute, like we said before, we were still bullish, right? So if you took that short on this candle down here, you would have got absolutely violated, right? So keep that in mind. Higher time frames hold higher power. Just because we flip on the 1 minute does not mean we flip on the 5 minute. But anyway, I'm kind of getting ahead of myself here. I have yet to even define a breakup structure on a bearish side. So again, bullish price action and a breakup structure on the bullish price action is going to be a lower low being created. So higher highs, higher lows, higher highs, lower low. What? Breakup structure. Well, Pam, right? Now this also comes with, if you want to execute a trade off this also has to come with extra confirmation. There has to be a lot more things that the market is telling you to actually take a short here if price action is breaking. That's also not what my structure is based on, but that's one of those things that tells me where the next draw on liquidity is, which we're going to, I say this all the time. I keep saying this, but we're going to go over it in later videos. So don't focus on that. Don't think about what I'm saying at all. Just kind of follow price action and a breakup structure today, right? So that's going to be one of those things that's going to break structure on your time frame that you're seeing, respectively. I don't like this line; it's way too long. Let's do trend line here, right? Oh my god. Okay, there. That's the breaker structure. Now, for a bearish price action, it's going to be lower lows, so lower highs, lower lows, right? Like I said before, and then a breakup structure will be creating a higher high, right? So now that is the break of structure. Oh, I keep doing the wrong line. That is the break of structure. Pam, Pam. And now we're going to go into depth about how you could use this in trades later on. But all I need you to understand is how to identify these within the market, right? It's not exactly the most important for my model, but it's definitely something to know. It's something to understand. It tells you when the market is flipping and when to understand if the market's actually flipping, if you're getting faked out. Because there's going to be a lot of times where price does this, and you could think, yes, we're flipping, or we're flipping price action, we're breaking structure, and then you get another pullback and we go lower, right? Again, we're going to get into fair value gaps too, and why price does this, and why price drives in any sort of direction, and what moves price in general. But for now, all you have to understand is overall structure and how it's going to look like and how it's going to pan out. So if you want to get into the charts here and actually identify this and start looking for this, again, I want you to keep in mind the definition of highs and lows, because it's very important. And the second you start misidentifying this is the second you're going to start misidentifying everything else, including draws and liquidity and breaks of structure. So if we get into, here we go. I don't know if I, wow. I don't know if I like this. I want to find a nice clean example. Here we are. Okay. So again, also one of the things that helped me identify breaks of structure is a clean close below. So this isn't exactly a sweep though. You know, I want to find something in the 1 hour time frame just to really show you guys. There's probably going to be, let's do 15-minute. And also let's remove all of this shit. I think you got the idea. All right. You know what? This could be a pretty decent little sweep to show you guys breakup structure. So here, price comes up to this level. Again, don't think about sweeps. This is just me trying to identify where the breakup structure was. On the 1 minute, it's going to probably be a lot cleaner here. Okay, yeah. So this is kind of a short-term frame of bullish price action and bullish structure. But anyway, if we're looking at just this area over here where price is driving upwards, we come up. And now, since this area over here, I'm going to mark this out so you guys understand what I'm talking about. This is overall bearish price action, bearish structure, right? Again, you have some sort of pullbacks. This is kind of a break of structure on the highs, but again, don't worry about that. That's kind of just wicking out. It's not really important. The second, so let me draw this as red so you guys understand that this is bearish. The second price comes above this high. Like I was saying before, in a bearish price action, you have to make a higher high, right? A higher high. So when you're going down a bearish price action, lower low, lower high, lower low, lower high. You make a higher high. This is now a confident break of structure right here. BOS is what we call it. So I think actually, do I have a template for break of structure? I do not. Not important. Anyway, this is a break of structure now. Candle prints over that level, a solid print, a big displacement over this level. This gives you good confidence that we are now going to be chasing these highs, that we are breaking the structure. We're going to be moving upwards and chasing these highs over here. That would be a break of structure. Now, going to a bearish break of structure now, or I guess bullish break of structure. We're printing upwards. We create this high, come down. The low is all the way down here. We don't make a lower low. We make a higher low. Come over here. We break this high again, make a higher high. Now, where is the break of structure, right? Well, for one, we make a low down here. Like I said, bullish price action is going to be making a lower low, right? You're like in a bullish price action, making higher highs, higher lows, higher highs, higher lows. I'm going to draw it out again just for you, so you guys understand this. Higher highs, higher lows, higher highs, higher lows, higher highs, sorry, higher lows. You don't make, or you could even say you make the higher high here and you come down, you break that low, break of structure. I'm going to keep saying it, break of structure right there. So now where do we have here? Where is the identifying break of structure? For me personally, I identify that as a complete displacement through that structure, through that kind of price action there. So here we have this kind of wick out here. You kind of come, tap this, come up. You could identify as a break of structure. That is not a break of structure for me. Where is the break of structure? Where this 1 minute candle prints confidently through that low. This is now the break of structure. We're now breaking structure, we print below, and now we are in a bearish price action. And now you can identify it. Again, I could even go into the line chart here, right? High here, lower low. You can even identify it earlier, honestly, but that was the real identifying from that wick, that identifying break of structure for me. Higher high over here, lower low, lower high, lower low. And now we are in bearish price action. We're now going downwards, now following the chart downwards. That was the flip. That's what flipped the market. So that's why this stuff is important. It's important to identify a break of structure because it tells you where the market now wants to go. We are now out of the zone of buying. People are not buying it anymore. We have now broken structure to the downside, and we are now seeking liquidity on the lower levels. We're seeking sell side liquidity, which this is all new information for you guys. We're going to get into this much later, but that is just one of those things that tells you where price is seeking now. So, right, I'm not even going to mark this out for you guys too. So this was bearish price action over here, and now breaking the structure, you go to bullish. And again, the way I'm marking this out is not how I actually mark out price action. Like once you get into this and you start identifying how this stuff works, you don't need to do this anymore. You don't need to mark out fair value gaps. I mean, fair value gaps kind of, you might want to mark, but you don't have to mark out price action because you could see how the candles are moving. You just intrinsically know the price is moving this direction. The price is moving that direction. It's not hard to understand once you see it, right? And I don't even identify breakup structures anymore. This just kind of is behind my head when I'm thinking, when I'm trading. That tells me where price wants to go now, right? I never trade against the trend personally. Some people will take scalps. So you'll have movements in the market, and it's easier to identify this on higher time frames, but you'll have movements in the market where the overall structure of the market is going up. If you think about indexes in general, they're consistently going up year by year. You'll have years where it's down, you'll have years where it's up, but if you average it out, I think it's 6 to 8%. You know, if you what is it? Calculate interest and all that, and inflation. So over a long period of time, the market's consistently going up, but you'll have pullbacks. You'll have these sort of pullbacks right here. And if you're a scalper, obviously not like a year time frame, this also happens in an hour time frame, 15-minute time frame. If you're a scalper, you'll be taking, I mean, not all scalpers, honestly, but if you see a break of structure, you'll be taking a trade here, right? You'll be taking a short, target interior liquidity, and you'll take a trade right over here, even though market structure is bullish and we're going upwards. Me personally, I don't trade like that. That is already an opposing confluence in my trades. So what I am looking for is to take a trade based on where price action is moving. Where the price wants to go is where I follow. I trade with the trend, right? That's what most people should be doing. But again, if you're a scalper, if you follow someone else that does the opposite and it works for them and it works for you, who am I to tell you otherwise, right? If that's what works for you and you follow that trading plan, you follow your model, you know, then so be it, right? But I'm just here to tell you how I trade, my model, and how I read the market, and how, you know, I recommend you guys do too. So again, trade with the trend. That's what breaking of structure helps with me. Sorry, that's what price action and break of structure helps with my trades. So if we are in a relatively bullish price action, we are taking longs, right? We are targeting buy side liquidity and taking long positions on pullbacks, right? And we're targeting this liquidity, we're targeting exterior liquidity somewhere else. Stops are below here, or honestly, the trade would probably have an enter over here and stops over here. That is the entry model for me. We're gonna get deep into how I actually take my trades and what is the real confidence for my trades, but that's zoomed out, and how you see, if you want to look at a line chart and you don't look at it on graphs, zoomed out, that is how I will take my trades, and that is how I take my entrances. And that's the most simple way for me to describe it. Again, in future videos, we will go over it. I cannot say this enough. Don't get too jumpy here, right? I'm going to make these videos day by day. You guys can follow me. If you guys want to learn more about it quicker and sooner, you can't wait for Eric to post a video. That's fine. TGR makes videos that are very similar to these, and they teach you guys a lot about the same stuff that I'm talking about. They're very informative. That's the same reason that I got into this, and that's the same way I learned trading was through TJR. So shout out to him. If anyone wants to watch him, I will not complain, right? I'm not here to bring you guys over to the TP3 side and keep you guys here and watch my videos, right? There's plenty of other videos out there for you guys to learn from. And all I need you guys to do is actually learn and pick one strategy and trade one way, right? Be consistent. That is all this game is. Just consistency and not giving up, and you will go so much further than everybody else, right? So anyway, well, I ran a tangent over here. I don't really know where I was going with this. Break of structure. Yeah. Anyway, so yeah, trade with the trend. That's the whole point of this. So if market is breaking structure, there is no reason you should be taking a trade, right? If you know that there's no definitive direction for the market anymore, and the market's now doing this all haywire shit where it's going up, it's going down, within short time frames, what are you targeting? What are you going for? Here, this is a viable trade, honestly, right? Break of structure, confident candle. Again, I don't really know the exterior draw. This is only one on a 1 minute, so I wouldn't really take this. I'd probably target highs up here, which we didn't even get to touch. But just on this limited view that we're scoping this at, this might be the only thing that I could possibly see to take, because we're still on a 5-minute time frame. We're still relatively bullish here. Where was this? I don't even know how far I was in the charts to see this. No, I couldn't have been that far. Oh, over here, yeah. So we're still relatively bullish in this time frame. So that would have been the only viable trade for me to take. Anyway, break of structure. I keep running off tangents and I keep running off track. Sorry, that's just kind of how my brain works. I love this stuff. I hope you guys can tell. This is really like all I live and breathe at this point. So I hope you can keep track of what I'm saying, and I hope I'm not losing your guys' attention too much. If I am, please put that in the comments. I'm gonna kind of work on that. Try to fix my brain, but it's always scattered all over the place. But anyway, yes. So for your homework today, I want you guys to identify 3 breaks of structures on 3 different time frames. And I want you guys to try to even it out, make like some bearish, some bullish breaks of structure. So it's going to be 9 total. If you want to even it out, make 10. So 5 bearish and 5 bullish breaks of structure on separate time frames. Do that, identify that. And I think that's really it. So I guess I'll give you guys an example if you want. If you go on the 1 hour time frame here, zoom out, you could see kind of tough to see on the 1 hour. I guess this could be a break of structure right here, actually. Even here, right? Yeah, so you have a low right here. Identify that low. We now break that low. That is considered a break of structure, right? Of course, didn't really play out as much as you wanted to, but it did set another low here. It's kind of hard when you're on higher time frames, because for the most part, we're kind of just ripping upwards. But let's see if we can identify another one. It'd honestly be easier to do a bullish break of structure on 1 hour, so we're gonna do that. We have lower lows, lower highs being created. Honestly, right here, another break of structure, right? We're going upwards, creating higher highs, higher lows, higher highs, higher lows. Here comes Big Daddy Dick candlestick. Whoopam, we break that level, right? That is now a break of structure. We now have bearish momentum, bearish movement. We are going downwards. Another break of structure right over here. This is the low that we create, the high that we create on this move downward, on this downtrend. And we now break it with this, another Big Daddy bullish candlestick this time. Now moving price action up, right? So now we're making higher highs. We break this high, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. You get the idea. And then we get this higher low again. And what do we have? Once more, again, this happens every single time. This is what what moves price in general. You see price action constantly breaking. You see this everywhere. You can identify it throughout the whole market, right? Another one, higher high, right over here, higher low. What do we get? A break of structure to the downside. Good boy. All right, break of structure to the downside. Now what do we have? Bearish price action. We're going down. Now, what do we have here, guys? Surprise, surprise. Make this low over here. We have this high. And what do? We break structure again with a Big Daddy long candlestick. Honestly, that's not even correct. Here we have the other low, the other high. This is what we're actually after. Now, what is break of structure here? You guys might be saying, over here, there's a high, right? That didn't break structure. Our structure's up here. When we broke it is on this Big Daddy Dick candlestick, right? Prints upwards, prints at it confidently, prints over that level confidently, and now we are in bullish price action here. It is very simple, very easy to read. You see this all over the charts. You're going to see it time and time again, and this will dictate the direction at which you take your trades, direction at which price is moving, right? Very simple, very easy stuff on day 5. You guys are going to get it really easily. I hope so. If there's any questions, leave it in the comments or hit me up on Instagram at TP3Trades. That's kind of everything that I wanted to cover today. So it's kind of a long video, 25 minutes. So I literally said it'd be shorter, but that kind of took a while. Anyway, thank you guys for coming. I appreciate it. Again, any questions, leave them in the comments, and I'll see you guys for day 6 tomorrow. Love you all. God bless.